Hey everyone, Brian Bogner here with Greg Towner, our Chief Investment Officer here at Parallel Portfolios. It's end of the year, beautiful month here in December, and we want to talk to you today about one of the questions that we're getting right now from a lot of our clients is, can this stock market go higher? Not a lot of clients believe that it can. And quite honestly, the conversations that I've been having with folks right now have been more around, oh, I don't know, Brian, it's just, it's up there. There's all these issues, there's all these problems, there's all these things. Can it go higher? Does it really have, what is that? Are we on the edge of a, precipice and things like that? So we're going to take the next few minutes here and answer this question. Greg, take it away.
Yeah, absolutely. Let's start with this broader view that we always look at. The blue line here is the S&P 500 over the last 3 years. As we know, it's continued to march higher. Now, recently we have had a little bit of volatility. It probably feels like a little bit more than it is, just because it has been such low volatility for a while now. Under the surface, some of the more speculative areas have definitely gotten hit harder, but the broader market, the S&P, has pretty much held in place so far. Like you said, there are definitely concerns, and one of them, some people think that the market's gone too high, it's already at too high a point. Well, we wanted to address that in a couple of ways. So this data is through last week, and we can see here that so far this year, we've had 67 new all-time highs in the S&P 500. Now, right now, that's the second highest ever. The only other higher year was back in 1995, and we had 77 all-time highs. Now, I think not coincidentally, that was also around the time that then Fed Chairman Alan Greenspan had the famous line of irrational exuberance describing the stock market. Things had gotten too carried away, things were too high. Well, the market went on, as we know, as we were building our careers then, had another 4 years of just the strongest part of the bull market, even after those new highs and after that statement. So, obviously we don't know if that's going to happen again, but it just shows that it can happen again and it can go higher just because the market is already at a so-called high point. I think another way to look at it is if we go all the way back in time to essentially the beginning of the modern stock market, these types of new highs tend to happen in big clusters that can take multiple decades. And the reason being is because they go through secular bull markets, long periods of time where the market generally goes higher. That doesn't mean it can't go down that period. During those periods, there will be smaller, shorter bear markets. Obviously, we saw one in 2020. There may be some more. But what it means is you don't tend to have those multiple year-long bear markets until this long cluster of the secular bull is over. And we think there's a good chance that we still have more years ahead, maybe more volatility than we've been having, but we still think ultimately there could be some new highs ahead in years ahead of us. All right, so if it's not talking about, the market's too high, what is the other topic? Of course, it continues to be inflation.
Yeah.
Right? I mean, for all of us, we understand that. So let's take a really long-term view. This goes back to 1980. We recently had a CPI print of pushing 7%. No question that hurts some people's wallets. But for comparison's sake, that is the highest since all the way back to 1982. Let's talk about some of the similarities and differences between then and now. Back then, the interest rate on the 10-year bond was 14%.
Wow.
Right now, at the same CPI, we're at 1.4%. It's an amazing, dramatic difference. And then also, coincidence or not, back in 82 at that point, started one of those long secular bull markets for maybe 20 years or so. So it doesn't mean that this is going to play out the same way again, but I think you can't just say, oh, the inflation is high, that's doomsday. Hey, maybe it will be, the future will tell, but we think history tells us that's not necessarily the case. And I think one of the reasons, or a couple of the reasons to feel okay, so to speak, about the inflation is fortunately so far it's at least coming with strong economic data. I mean, we're back to near the all-time lows in the unemployment rate. So that's great. You wouldn't want to see people struggling to find jobs while prices are going up. And then also GDP, US GDP is now well above where we were pre-pandemic. And estimates for this quarter are looking like they could be one of the highest quarters ever. So, just like we won't continue to grow at that rate, indefinitely. It will slow down, of course, but hopefully that will also coincide with some of the inflation slowing down. So we're not seeing stagflation. We're seeing inflation with strong growth that's a decent scenario, and probably both will come back to more moderate normal levels as we go in the quarters ahead.
Good stuff, Greg. So just to review and recap here, stocks are, like we said, when you look historically and they're making highs or at highs, it is generally a positive going forward. It's not a negative. We think, oh my gosh, the market's making all-time highs. I hear this all the time from clients. Market's making all-time highs. Should we get out? Should we get out? That's actually a very positive thing. Again, we don't predict. If you notice, there's a lot of other firms out there that are putting out, here's what we think is going to happen over the next year, and here's what we, predicting things. We don't do that here. We implement a risk strategy. Okay, so that if the market does start declining or things start happening, we've got things in place to help limit that decline. Okay, we're not predicting what's going on here. That is a fool's game, and there are times when people get it right, and just as many times they're going to get it wrong. Inflation, of course, continues to be a concern with us here, and I think for everybody. Very different environment, though, like Greg said, than we were back in the early 80s when we had high inflation. So still a little too early to see how that plays out. But the good news is the economic data is very strong. People are working right now. Okay, there's a lot of people making money. GDP, the economy is actually doing, even in spite of all the issues that are going on right now, whether supply issues, things like that, even labor issues, that the economy is actually doing extremely, extremely well. So as we end 2021 here, if you've got any questions, just give us a call, shoot us an email. We'll be happy to talk through any of these issues with you. Thanks so much for listening, and have a great day.